At the beginning of the year, there was a massive wave of excitement in the crypto space, particularly around XRP, with bold predictions suggesting it could reach an astonishing $10,000 per coin. Now, those predictions seem to be gaining more credibility, especially with Larry Fink from BlackRock reportedly expressing support for XRP. This isn't just speculation anymore, it's becoming more tangible. According to various sources, major financial players like BlackRock and Vanguard are seriously considering XRP as a vehicle for cross-border transactions, which could significantly boost its utility. Demand. There's even speculation that BlackRock might introduce an XRP-based ETF, a move that could potentially reshape how institutional investors interact with the asset. Larry Fink's involvement doesn't end there. He's also exploring the tokenization of the $30 trillion real estate market, which aligns perfectly with Ripple's broader vision of a tokenized economy. Add to that the potential flow of $1.2 quadrillion from the International Swaps and Derivatives Association through Ripple's ecosystem, and you begin to see a far bigger picture, one where XRP's value could skyrocket well beyond $10,000, potentially reaching as high as $60 per token. These are not just pie-in-the-sky dreams. There have already been unusual spikes in XRP's price on major exchanges like Crypto.com, where it briefly soared to $43, and other instances of XRP hitting thousands of dollars on different platforms. While these may be glitches or bugs, they also hint at the unpredictable and explosive nature of the asset's valuation in volatile environments. Meanwhile, in a twist that adds another layer of intrigue, Gary Gensler, the SEC chair known for labeling XRP as a security, has an identical twin, Robert Gensler, who serves as a vice president at TEA. Price, a massive investment firm heavily involved in crypto, including XRP. This apparent contradiction, where one brother is enforcing regulatory scrutiny while the other is tied to investments in the same asset, raises eyebrows and invites deeper questions about potential conflicts and the future direction of crypto regulation in the UWs. Altogether, these developments paint a fascinating, albeit complex, picture of XRP's potential to revolutionize global finance. The evolving world of cryptocurrency investments and the complex legal frameworks surrounding them continue to raise intriguing questions, particularly when it comes to major players like XRP. One can't help but wonder if individuals in influential financial positions such as Robert Gensler, vice president at TEE, Price might possess privileged insights into XRP's future potential, perhaps even more so than with Bitcoin or Ethereum. Given Price's growing interest and investments in these top cryptocurrencies, it's plausible to speculate that such decisions are based on information not yet available to the general public. Officially, the SEC claims that insider trading doesn't occur, but numerous reports and investigations have painted a different picture, revealing recurring patterns of misconduct within the agency. These cases often involved SEC employees allegedly sharing non-public information with close contacts, who then make profitable trades before official announcements reclassify certain digital assets as non-securities, causing their value to surge. It's not far-fetched to consider the possibility that Robert Gensler may have had access to confidential information from his brother, Gary Gensler, the SEC chair, regarding the agency's potentially weakening legal position against Ripple Labs. Such information, if true, could hint that Congress is pushing for a settlement, making XRP an attractive opportunity for savvy investors. The fact that Price is allocating more capital to Bitcoin, Ethereum, and especially XRP suggests something more is happening beneath the surface. Meanwhile, the crypto community is buzzing with speculation about XRP's explosive potential, with some enthusiasts forecasting prices soaring to $589, $10, or even $60, Though these predictions seem extreme, they underscore the intense interest in XRP's future. Wall Street appears eager to tap into XRP's profitability, with speculation growing around the idea of an XRP ETF being launched as a major financial product, adding another layer of intrigue. Recent coverage by Crypto Basic highlighted claims that JP Morgan has made a significant move by allegedly acquiring 7.5 million XRP tokens. This caught the attention of a former Ripple executive after crypto personality Ben Armstrong, formerly of BitBoy Crypto, made the bold assertion that this XRP purchase equates to 7.5% of VI. JP Morgan's entire wealth. However, a closer look at the numbers reveals a major flaw in that math. 7.5 million XRP is currently worth just over $4 million. A far cry from 7.5% of JP Morgan's Braden. Reported $3.89 trillion in assets as of 2023. Despite the mathematical inaccuracy, Armstrong emphasizes the symbolic importance of such a move, arguing that it signals JP Morgan's increasing involvement in crypto and possibly marks it as an emerging force in the space. Whether or not the specifics hold up, the broader trend of major financial institutions moving into cryptocurrency, particularly XRP, reflects a larger convergence of traditional banking with the decentralized finance sector, placing XRP squarely at the center of this fascinating transformation.